We're in a bear market. The market has turned, it's gone down, it's correcting. What's it correcting from? Mismanagement by our government in its distribution of $9 trillion in less than 9 months in 2020, which has then created inflation, which the Fed then reacts with cutting back on their spending and also increasing interest rates. And so we're going into a recession, which is creating a bear market. Okay. We all understand that. We all understand that every once in a while, these things happen. It was the subprime crisis, and before that, it was the dot-com bubble. But eventually, it all gets squared away, and we get back on a path of a growing economy. But the question is, what do you do in a bear market? And I think the answer is you do the same thing you do in any market. You invest in good companies. And you, at this point, particularly if you're young in your investment career, you'd use dollar cost averaging. And you choose the investment vehicles that you use to give you tax advantages, and then you just keep investing. And that's what this video is all about. How do you invest in a bear market, and how do you gain confidence that you're doing the right thing and that it'll all turn out and this too will pass? How do you do that? Well, my experience, and I have some 77 years of experience. I'm not a 29-year-old. I didn't make all my money because I lucked out and invested early in Tesla and Bitcoin, and now I'm wondering, what should I do? I've lost a lot of what I made. No, I've lost a lot of what I made, but I have it diversified. I have it in investments that I'm confident are going to go forward. But more importantly, I educate myself every day. I look at it and say, what's happening today that's going to affect tomorrow, and how can I profit off of it? So that's what I want to talk to you about today. I want to give you some examples so that you can look back and say, that makes sense. So that's what I need to do. Basically, I'm going to tell you, you need to adopt a regular investment pattern, and that is dollar cost averaging. You need to find the vehicles that you should invest in. Are they qualified or non-qualified? Are they IRAs or Roth IRAs? Or maybe they're 401ks, or maybe you are self-employed and you need a solo 401k. And then maybe you need a brokerage account. And what kind of a brokerage account do you have? Do you need a traditional account like E-Trade or Charles Schwab? Or maybe you need one of these new accounts that give you the ability to do your trading on your mobile device. And I would recommend Moomoo. Yes, Moomoo. I'll tell you more about Moomoo because I've been blown away by Moomoo. I had no idea that I could do so much on my trading account on my phone. And then understand that you need to invest in sectors that are going to change your life. Well, how am I going to know how to change my life? I need to read books. I need to understand. Need to read nonfiction books. I need to use the tools that are at my disposal, and I'll share with you a long list of tools that are at your disposal in the description that I use, that my tribe uses, that we work together to make good investment decisions, and then join a community. Get into a group that works the same way, that thinks like you do, and you can exchange ideas with. Whether it's at your Starbucks, whether it's at your church, your synagogue, or your temple, get in a community that can help you learn and make good investment decisions and bounce ideas off of. That's what this video is going to be about, and that's what I'm going to try to educate you on. This is not financial advice. This is some of the best financial education you're going to get from an old man.
Best of Us Investors presents Carrie Griegmeyer.
The first thing I want to do is dispel to you that this is a first-time event and that the market is going to hell and you're going to lose everything you've got. I need to get you confident that that isn't going to happen. And so I'm going to take you to my computer. I'm going to take you to an Excel spreadsheet that I have created. Now, some of you are going to look at it and say, I've seen that before. No, I varied it because what I want to do, I want to draw a parallel between the dot-com bubble and the 2020 flood of funny money that created a bubble that just burst. And I want you to show you this has happened before and what the consequences were if you stayed in good companies and if you dollar cost averaged in them through the duration of the event. So watch this. If you've been to my channel before, you've seen a variation of this chart. It's an Excel spreadsheet, actually, that I've created on Apple, Microsoft, Amazon, NVIDIA, and Google. I used to have Facebook in there, but have since taken that out. And if you've seen some of my recent videos, you know why. What I'm showing you here is how to invest in any market, and that is through dollar cost averaging and buying companies that are going to be part of your future. And I have chosen as my companies that I think are going to be a part of my future, that I want to be the mainstay of my portfolio: Apple, Microsoft, Amazon, NVIDIA, and Google. But in times like this, you tend to think, well, maybe I'm not doing the right thing. The market's working against me. I'm losing money. And what I want to show you here is good companies lose money in some years. We know that just about every company lost money in 2000 as a part of the dot-com bubble and the subprime crisis in 2008. And you can see here each of these stocks. Apple lost 71, Microsoft 64, Amazon 80. NVIDIA, that was the first year it went public. It actually did not lose money until 2002 when it lost 83%. And then Google wasn't a public company at 2000, but in 2008 they lost 58%. NVIDIA lost 76%. Amazon lost 45%. Microsoft lost 45%, and Apple lost 57%. One of the things that really stuck out at me on this was look at Amazon. Lost 80% in 2000, and then the following year lost another 30%. That took a strong stomach to make it through that. So what I've done is said what an investor in any market needs to do is pick good companies that are going to be a part of the future, particularly if you're young, and then just dollar cost average into them. And what I'm showing here is each year the individual invests $2,000 and then basically reinvests the balance. So the balance here was 2,000, grew to 5. We added 2 to it. It's 7. And we then just plugged in the annual growth factors. And you can see Apple with an initial investment of 2,000 and an annual addition of 2,000 grows into almost $7 million over what would be a 22-year period of time. Did the same thing for Microsoft. Didn't grow near as much, about 500,000. Amazon grew to about 2.6 million. NVIDIA started a year late, grew to 4.7 million, and Google grew to just under 200,000. So a total investment of 210,000. That's 10,000 a year for these three. Then you add NVIDIA in 2000 and add Google in 2004 for a total investment of 210, turned into $15 million. And really, all you had to do was ask yourself each year, are these still the companies that I want to be invested in my future? And as you can see, if we take their average return on investment, we come up with a total average of 38%. Now, if you're young, what I would recommend to anybody is you put this into a Roth IRA. As an individual, you can put $6,000 a year currently into a Roth IRA. So if this is an individual, 6 is going to go into a Roth, and 4 will go into some other form of investment. And I would hope that would be your company's 401k, where they are matching. The issue is in your company's 401k, you probably aren't going to be able to pick individual stocks. So in that case, maybe you would want to put that into a normal IRA, that $4,000, and the $6,000 in a Roth. Then the other issue or opportunity is if you are a couple, you could put the full $10,000 a year, $6,000 apiece is the allowance, and this would be potentially what you would end up with. Is that an easy way to invest? But the question is, Carrie, in hindsight, you can look at Apple and Microsoft and Amazon and Nvidia and Google and say they are where I'd want to invest. Whoopee. That's with hindsight. But foresight is not as good usually as hindsight. So let's talk about, are these the companies I'd want to invest in, or are there other companies, or what do I feel and what do you feel is going to be the opportunities of the future? So let's talk a little bit more about that. As I said, these are the companies I think you should invest in because I think they are going to address the future trends that we are going to be facing in our economy, in our investment community, and in our world. Well, what are those trends? At the top of that trend is artificial intelligence. And please, understand what artificial intelligence is. I'm not going to sit here and explain it to you, but read this book. And again, this book is one of the books that I'm going to share with you in my tools, the tools you should use. And in those tools, you're going to find books, you're going to find websites, you're going to find movies, you're going to find anything you might need to make you a better investor. What are some of the other trends? Please come to understand what genome sequencing is, something that cost $1 billion in 2000, but is now down under the cost of $1,000 and is going to change your medical life, and you're going to change the world from medical cure or care to medical cure. This is important. This is probably going to be the number one change in our world in the next 5 years. And you need to understand it. And how do you understand it? You read the right books. Again, go to the description, and I'm going to send you a list of the tools that I think you need to have to become a better investor. Beyond artificial intelligence and genome sequencing, we have a broken supply chain. If you haven't figured that out, then you haven't been paying attention. What needs to happen? That needs to be corrected. How is it going to be corrected? You need to read the book, Peter Zion's latest book, The Beginning of the End, and you will understand that we are going to deglobalize, and we're going to bring manufacturing back to the United States or within the continent of the Americas so that we can control our supply chain. Well, what are the implications of that? 3D printing and robotics is certainly a part of it, and there are other parts, and we'll talk about that in the future. And then you need to understand the world of big data and how it's changing, and you need to understand that data is yours. Okay? They have been collecting that data off of you for the last 40 years. They have been making a lot of money off of you and I's data, and that needs to change because it's not fair, because the first word I said is this is you and I's data. They're making money off of it. Who is they? Google, Amazon, Microsoft, Apple, Facebook, and Tesla. Yes, Tesla is making money off of your data. Well, how is that? How is Elon using my data? You're the car that's driving around that's doing all the video. That's your video. That's your data that Elon is making all the money off of. Is that fair? Is it fair that Apple collects your movements through the internet and then sells that data? Is it fair that Amazon tracks your buying habits and then sells that data? Is that fair? No, it is not, and it needs to change because they are becoming billionaires, and you and I are fighting to make ends meet. We're dealing with high-priced gas. Do you think Jeff Bezos is concerned, or Elon Musk, no, he drives a Tesla, about the cost of energy? No, because they have become billionaires off of you and I. And that's going to change. This is the biggest revolution. How is that going to change? Because of artificial intelligence. We now can organize that data. We can use blockchain to say, that's Carrie's data, that's George's data, and that's Mary's data, and they own it. And if you Google, Amazon, Microsoft, Apple, Facebook, or Tesla want to use it, you need to rent it from them. That is the biggest change that is going to happen in this world in you and I's lifetime. This is going to change everything. And it's driven by artificial intelligence, machine learning, quantum computing, and big data. You and I's big data. Now, if you don't know where the world is going after this video, and you don't know how to invest, you haven't made it this far through the video. This is what's going to happen. You now know it. I'm going to give you the tools so that you can build your education, you can build your knowledge, and you can become the smartest guy in the room, because I'll guarantee you the people you're playing against at Wall Street don't have a clue. They do not know. Just turn on your TV. Watch what they're talking about. They're talking about energy prices. They're talking about inflation. And they're talking about interest rates. See if they ever mention that this is your data and this is your quantum computer and you need to get paid for it. See if you ever see that. But you will in the future. I'll guarantee you. Why? Because it's fair. It's the only fair way to move forward. Okay, that's what this channel's all about. I'm a visionary. I lay in bed at 5 o'clock in the morning and say, what's going to happen next? Based on what I learned yesterday. Some of you beat me up because I said buy Facebook at $320 a share, and now I sold it at $100 and whatever. Because I learned something. Because I was able to connect dots to say, Mark, you're no longer pertinent because my grandchildren don't use your vehicle that makes over 50% of your profits. And until you reinvent yourself, and oh, by the way, maybe you know the same thing I do because you changed the name of your company from Facebook, which is no longer relevant, to Meta, which will be relevant maybe in 10 years. But in the meantime, I want to invest in big data and who's going to pay me for my data as a result of artificial intelligence, machine learning, quantum computing, and fairness. Talk to you again tomorrow.